Your money-making broadcast starts now. The Bank of Canada held rates steady, but Governor Macklem warned that the Iran conflict is creating a stagflationary squeeze. Oil surged past $107 a barrel, sending Canadian energy stocks sharply higher. GDP beat expectations, Loblaw and CIBC delivered strong earnings with a dividend hike, and the loonie strengthened. Let's break down what matters for your Canadian portfolio today. Let's start with the numbers. The S&P/TSX composite closed at 33,318.39, down 79 basis points on the session in a mixed day across sectors. The energy sector was the standout performer, up 2.1%, as crude oil surged on escalating Iran conflict fears. Financials managed a modest gain of 0.9%, while the tech sector slipped 0.4%. On the currency front, the Canadian dollar strengthened 0.3% against the US dollar, with US dollar to Canadian dollar trading at 1.3625. The loonie got a lift from surging oil prices and better-than-expected GDP data. South of the border, Kevin Warsh was confirmed by the Senate Banking Committee panel for the Federal Reserve Chair position. This matters for Canada because a more hawkish Fed could shift the global rate environment and influence the Bank of Canada's room to maneuver. Now for our top story, the Bank of Canada held its overnight rate steady today, but Governor Macklem delivered a sobering message. The escalating Iran conflict is creating a difficult policy environment. On one side, rising energy prices are pushing inflation higher. On the other, the same conflict is slowing economic growth through disrupted trade routes and heightened uncertainty. This is classic stagflation territory, and it puts the bank in a bind. Governor Macklem was clear that the bank is monitoring oil price pass-through to core inflation, particularly in transportation and goods prices. If those effects broaden, the bank may need to stay on hold longer than markets currently expect. That said, markets are pricing in roughly a 65% chance of a rate cut at the next decision on June 3. Traders are betting that growth headwinds will ultimately outweigh the inflation concerns. The loonie's strength is helping on the import side, giving the bank a bit more flexibility. For Canadian households, this means variable rate mortgage holders will need to stay patient. Fixed rates have already eased somewhat, but do not expect aggressive cuts until the bank is confident inflation is truly tamed. Let's turn to the energy sector, which is absolutely ripping today, and is the main reason the TSX avoided a steeper decline. West Texas Intermediate crude surged to $107 a barrel, while Brent crude hit $120. For Canadian oil producers, the news gets even better. The Western Canada Select discount is narrowing, meaning our heavy crude is trading closer to global benchmarks and more revenue flows to the bottom line. Suncor Energy, ticker SU, jumped 3.2% to $67.07 after releasing a strong operational update highlighting improved upstream production and lower costs per barrel. Canadian Natural Resources, CNQ, gained 2.8% to $47.21, benefiting directly from the oil price surge and its position as Canada's largest independent oil and gas producer. Enbridge, ENB, added 0.72% to $53.42, as higher oil prices translate to increased pipeline volumes and stronger cash flows for the energy infrastructure giant. This energy boom is a uniquely Canadian story. While the rest of the world grapples with energy-driven inflation, Canada's economy receives a net benefit through higher corporate profits, increased royalty revenues, and a stronger currency. Alberta and Saskatchewan are seeing a direct fiscal windfall. The question for investors is how long this lasts. The Iran conflict shows no clear off-ramp, and for now, energy remains the trade. Moving to the broader economy, Canadian GDP continues to show moderate but steady growth. February GDP rose 0.4% month-over-month, beating the consensus estimate of 0.3%. Statistics Canada's preliminary estimate for March points to another 0.2% gain, suggesting the economy is expanding at a sustainable pace. This is actually the sweet spot for the Bank of Canada, not too hot to force rate hikes, not too cold to trigger recession concerns. On the corporate earnings front, Loblaw, ticker L, reported first-quarter earnings per share of $2.24, comfortably beating analyst estimates of $2.10. The grocery giant continues to benefit from resilient consumer spending, and the stock rose 1.1%. CIBC, ticker CM, delivered second-quarter earnings of $1.98 per share versus the $1.90 consensus, and raised its quarterly dividend by 3%, exactly the kind of news Canadian income investors want to see. Royal Bank, RY, slipped 1.43% to $175.22 in a generally mixed session for financials, while Shopify, Shop, dipped 0.65% to $121.26 in a soft day for tech. For stocks for Canadian investors heading into tomorrow. Number 1, our conservative pick, Enbridge, ticker ENB, at $53.42. The legendary value investor Warren Buffett of Berkshire Hathaway would recognize this as a classic wide-moat infrastructure play. Enbridge operates the largest crude oil and natural gas pipeline network in North America, assets nearly impossible to replicate. With a dividend yield above 6% and regulated cash flows, this is exactly the kind of steady compounder that anchors a portfolio. In a rising oil price environment, Enbridge benefits from higher throughput without taking direct commodity risk. Number 2, our balanced pick, and also our under $50 TSX selection, Canadian Natural Resources, CNQ, at $47.21. The legendary growth investor Peter Lynch, who ran Fidelity's Magellan Fund to extraordinary returns, would appreciate CNQ's combination of growth and value. His philosophy of investing in what you know applies perfectly here. Canada is an energy superpower, and CNQ is the country's largest independent oil and gas producer. The narrowing WCS discount means more revenue per barrel, and CNQ's low-cost operations generate tremendous free cash flow at current oil prices. Number 3, our growth pick, Shopify, Shop, at $121.26. Disruptive innovation investor Cathie Wood of ARK Invest sees enormous potential in e-commerce platforms that empower entrepreneurs. Shopify is Canada's tech champion, powering millions of online stores globally. Well off its highs, and with e-commerce continuing to take share from traditional retail, the long-term growth story remains intact. It is higher risk, but the pullback creates opportunity for growth-oriented investors. Tomorrow's calendar: watch oil futures at the open for any escalation in the Iran conflict, and listen for Bank of Canada Deputy Governor commentary that could provide more color ahead of the June 3rd rate decision. The 65% odds of a cut will shift with every data point. I'm Chloe. Subscribe for daily Canadian market coverage with a distinctly Canadian perspective. See you tomorrow at 9 p.m. Eastern. Check our shorts for a 60-second highlight. That's all for today. We all become wealthy together.